since the start of the pandemic, excuse me. My teacher was in one years, and one of the key levels for us to hit on, I decided in certain 10 years for it to really start betting. Yeah, really, why not with it? Here in the we saw, last week, especially.
Hello, everybody. Good morning. Down 300. I went long earlier this morning. Right here. 448 went long. Got stopped out right there. I actually moved my stop down instead of letting it occur naturally at 57 ticks. I actually moved it down to there. Thought that was a good area, but we ended up hitting it. It would have ended. I would have put it down here anyway, at which I think we would have been stopped out eventually anyway. So. The market's rallying up. We'll see if we can get an entry or not this morning, this afternoon. It's a short day. I think the market closes at 1 o'clock Eastern, but they got FOMC meetings at 2 o'clock, so might be some after hours going on. See how the market opens up after 6 o'clock tonight also.
Particularly, frankly, cheap stock for anything. It's a question as to whether we should be kind of wishing, if you're an equity investor, for the conditions of your deal would really go down the line in rapid fashion. Companies, the economy is stumbling more than even the federal turbulence. Mike, I'm interested in the level of complacency that you see out there. A lot of people are saying we're due some kind of pullback at these record highs that hit with few stocks dominating and that sort of thing. Very few people now are saying that we're due a bigger than just a small correction. The likes that we did see in the past couple of years and what often still being talked about a lot of that time. Do you think there's a bit of complacency or not? Is that playing it? I think that's overplaying to say they're more. I would say overplaying complacency or at least some comfort. There's a belief in the market, and it's been reluctant to come around. It's interesting if you look at the aggregate strategist targets for the S&P 500, which we talked over there, JP Morgan perhaps going to be pulling away from its low target of 4,200, but it hasn't necessarily penciled in, even among the most bullish, a significant upside. So I think there's a sort of muted expectation for how high the market can go, but I would agree with you that essentially people are expecting at worst the seasonal routine 5-10% pullback as opposed to something a little bit more damaging or lasting. I look at a lot of sentiment things; they blend together to be sort of high neutral or generally kind of bullish in line with what you might expect for a market at record highs, but not necessarily kind of that extreme speculative green by green that we sometimes see when you're really in the board.
Mike, thanks. Mike Santoli. Let's stick with the markets and the Fed's role in keeping this rally going. Fed Chair Powell saying yesterday that the central bank had the ability to take its time cutting rates because the economy, and in particular the jobs market, is so strong. Joining us here, quick time ahead of Friday's payroll report, Marathon Asset Management CEO Bruce Richards. Marathon just announced a new joint venture with Webster Bank. Marathon has $23 billion in assets under management. Bruce, great to have you with us. Great to see you. Hey, you say a Fed rate cut in September at the earliest, if at all. Did that change the contours of movement?
Yeah, the market is open tomorrow. It's a holiday, but it's open until 1 p.m. tomorrow. So I'll be trading tomorrow because the market's open. What's my strategy calls for? No days off. Saturday and Sunday. Friday is a normal trading day. Market closes early today, 1 o'clock. July 3rd and July 4th closes early at 1 o'clock. Is Eastern times, and then it opens again. Or it's open full day on Friday. Closes at 1, opens at 6. You basically get 20 normal hours. Trading futures is 23 hours a day because it closes for an hour between 5 and 6.
It's been exactly changed. You go back to 1970s, 1978, it's over at the record. So this is 1980, so 18 months of different year.
We'll see if we get a trend starting here.
At 2 years. So he needs to cut because there's a lot of pressure coming from the administration and Jenny Gamble because debt service, is quite expensive. It's actually more expenditure on servicing our debt than on defense to them. And the former president, if elected as the head of the polls, will certainly lead the Powell and the Fed will raise. So regardless of who is going to be in office in the next 4 years, there's going to be that political pressure. And Washington's a small town. So it's not really around the pressure of real estate strains and leverage consumer, although just those are. It's politics, I believe. But Powell will not succumb to politics. So what he's going to want to see is inflation data that confirms A, and B, a softening in jobs. So it's going to start to take our eyes away from inflation because we only had 2% inflation for a year ago. So it's going to start taking our eyes away from that and focused on jobs softening. We're seeing that in the jobs numbers and sort of thinking
Having trouble going up or what?
place this year, like I've been saying. And I think it won't be 11 straight years like you saw when they were raising rates from 525 basis points. It won't be at 8 places. It will see one or two low rates and performance. One or two low rates and performance. So it's going to be higher for longer, I believe. And one of the things that you can surely bet on is the curve going to get steeper.
Wonder what the big horsemen, Nvidia, Microsoft, and Apple are doing. Apple's up 16 cents. Amazon's down.
We've seen a massive
Google's up 25 cents. Meta down $1.45. Netflix flat. Nvidia's up 2.5. PayPal's up 50 cents. The Soxel semiconductor ETF up $2. Tesla's up 12. Nice.
If you see it based on the specialty things, it's capital solutions that comes from
Bitcoin's down 2,000.
Since very fresh since the 1930s without employees and over 75 billion of assets. And so for Marathon, it lines that out. Imagine
Bitcoin just couldn't get going. It was up 70,000 and trickles down. I thought it'd bounce back up after going down to 63, but now it's at 60.
Now, she dedicated covering financial sponsors, big companies that can provide us long flow investment to our life.
Gold's up big today. Gold, damn, 37 points.
Because bank recognition exists. The pressures that banks are under business without balance sheet, servicing more sponsors, bigger deals, when they want to do bigger deals, when they think it makes sense, by using their own balance sheet and using our balance sheet while generating fee income. Because this is a 50-50 partnership where they get their earn, not only what they earn from increased deposits.
Alright, our LWTI, or Larry Williams trade index, large trade index is at 70.44. We need it to be at 75 to take a trade here at the top.
Rates remain high, and
Moving about a point a candle.
And the sweet spot and what changes to make private credit no longer.
And years and a decade past, it was not a healthy environment for businesses, I believe, because they took on too much leverage and risk wasn't properly appraised because all rates were suppressed by the Federal Reserve and the central banks around the world. I believe that the prices did dearly pay for that in the form of inflation, and to have an R-star that is too low makes no sense. And the federal, treasurers around the starts with, our own Jay Powell, but also Christopher Rock understands that market trade. To go, yes, it's going to be like credit, getting paid a really high rate return per unit of risk that we take. And so writing, let's say, construction loans, financing loans that have 4 times as leverage than EBITDA with 40 to 50% LTVs in the middle ones, the strong businesses that is the perfect combination for our portfolio in a high rate environment, medium rate environment, and kind of an 8 rate environment.
Man, it's moving. I wonder where it's going.
You think that you've got unengaged steam again? What is the risk that happens because they let me?
Man, it's not pulling up there too much.
Yeah.
Can't get over there. Look at that. It's a 70.6, 7.4. All that movement, not moving that much. Damn.
For this is very the base case. So the base case for me.
Come back down here and then do a power move up.
5 by the end of the year, we're not going to 8% by the middle of next year. Was 3.5% project down a few years. But I think the 10-year note should be priced about 100 basis points higher than that SOFR rate. So 10-year notes in the 4.5% range.
Hi, good morning. We're trading the Donchian channel. We're day trading the Donchian channel. Right now, the market's at a high on July 3rd, day before Independence Day, July 4th, and trend trading. It hits a high, and our criteria are met on volume, and my indicator down there, if it hits 75 on a long, then we're going to take the trade. On a short, it needs to break 6 on volume and break the Donchian channel. Donchian channel is right here. I'll highlight it for you. Longs on the top band, shorts on the bottom band. Right now we're bouncing off the top band and we just want a continuation for a trend to continue. So just waiting for this number to hit 75, then we'll get in if we get volume and we're still hitting the top. That's how we get our trends on the Donchian channel. We're day trading it on a 2-minute. 200 candles. Traded till the close today at 1 o'clock Eastern. Man, that's a big move there. Recap on down 350 is because I took a trade this morning. Right here. No, that's our profit. That was the day before. Right here, this morning. Right here. This was a trade this morning at 448. We were getting to go long. Looking for 300 ticks. We only went up 40 ticks, if that. It came back and stopped us out. And now the market's racing back up. So don't stick around in the trade because we probably would have been burnt trading prop firm using their capital. So you got that drawdown you got to watch out for. You exhaust your capital or your drawdown and you lose the account, you got to start over. So money management, risk management in your trades. The Donchian channel going up? Yes. No, it's not. Oh, the shorts are way down here. It hasn't even been moving up. Man, it's got to be moving up soon. The lower band of the Donchian channel is at the low of the day. We might get in here soon. Looking for our confirmations.
First spring burn. It's like it's Thursday. Would you like to think? Let's hope. And she thought, this is nine. Centuries, price. Really, nobody asks this exception. That's exactly what there's some prices. Sure. Save yourself that.
Oh, it's gonna be close. We got 40 seconds left on this one.
Shares the 10% by 5.6% coming off the deliveries beat yesterday. Whitebush ranges.
Oh, Tesla beat deliveries. Wow. And they're in the AI space. Everybody's in the damn AI space.
Discussions without a transaction.
Our indicators at 74.79. That was a close entry there. We'll see if we get on the next one.
Many excellent books on media.
Although I'd like for it to retrace, then go back up. But this had a little nice 40-point move already. We're looking for 75 points if we do get in.
We're taking out this new deal. Sure, that's up. Sure. It's hasn't moved them, but this is but the previous deal contingent on shareholder approval, which was, who knows what happened there. And take over each previously. And during that whole time, Sharon Redstone would not have certainty about what was going to go through. Our understanding now is the decision to make a decision. So she will get her.
There's the 5 and the 15 minute. 5 minute was crazy. It's like straight up rocket. But that's similar to what it looked like yesterday when we made some bank.
Thing for investors to consider here is that this is a highly personal and emotional decision for Sharon Redstone. Had my both makes an athlete player. She had.
So we don't take an L on this. It'd be 2 L's.
Yep. Yeah. It's like to say she's happy for her identity. She wants to trust me. We can keep this more or less in town.
Then put us here. Our stuff would be around here. So probably gonna get ticked in here.
A couple of days ago with interesting. Is that the type of thing that would have scared the expansion?
Nope. No volume there. No volume on that. No trade.
Stepping in.
See that down there? No volume. We didn't get any volume on that candle when we hit that top. We need a continuation of that, but we are over 75, so that's what we're looking for. Those 3 criteria in our Donchian channel.
Change the streaming landscape.
Go back and look at yesterday's big win here. I got in yesterday. We were gliding. We were already having a big move, but it came off a dip. Then we glided up, went sideways, and just slow move up. Today, we have a similar move here. We have a dip and up, but we got a big move here.
So for me, this is a matchup between 2 big media plays, but perhaps not the biggest.
Yesterday's entry was ideal. That's what we're looking for.
Is that bigger media matchup? Maybe even one something has to happen. The status quo streaming is not sustainable. The current players, except for Netflix, probably and so on, are losing billions of dollars. That can't keep going. It's a scale business. It looks like now there are going to be 3 or 4 big survivors, and part of those may have to be joint ventures, partnership between the smaller players like Paramount. So Will it be mergers? Maybe not, but fully joint ventures seem highly likely.
What's what goes away in your view? What do you explain right now?
Well, there's
Still no volume. God dang.
and so much way up there. And then
We need volume to go above our average here. Oh.
That's 200 years. Those are only three right now. By the way, this may not be good news for those of us who we've come through like gold and here. Before into this, it's astonishing to me how many options we have eternal.
One gets up. So maybe in an era of partnerships or potential deals, maybe that's the better era for the consumer as we sort of try and rationalize maybe spend those.
Like I said, question marks there. What kind of product will they offer? You say that they're providing you the amount of choice that you have now, probably not. It's still get by quality programming. And two, what will they do with pricing? Because in theory, the fewer big competitors you have, more of an all. I believe this starts to feel like more.
Maybe we'll get that little dip and then we can go back up. That way we're rest assured that we get that continuation going.
Exact numbers, but people are down there. You can get quite a bit of entertainment for a lot less than that, right? What's the subject of the next book? Well, actually, I'm working on another book, and it's a shame to pay for.
We'll come back down to the 30s.
Harvard and higher education. Very good. That's a summary. It's a good team. It's breaking news. I mean, so the details, it's time to discuss it. Jim, thank you.
Someone had the city of utility company as an international on how they're handling the summer heat wave growing demand from AI.
Awesome, guys. The UK and French elections and some spitting markets. We're back into fun. These bakeries fast to keep up with demand, so they're going to undeck. The online button makes it easy to choose your loan and get loans as soon as the same day. Your loan is on deck. They keep they all sound I'm Adam Weiss, founder and CEO of Companies. What we're out makes it easy. Your photos, scripted, frame, shipped to your doorstep. Just choose a photo that you love, create an album, frames, and in a couple of days, you will receive your photo in a beautiful handmade frame. So if you've got a special photo on your phone, install the free keepsake. We'd love a chance to print it. Each year, 6 million pet dogs are used to diagnose things. You're looking at every much higher. Now, the stars, an NYSE company, stops at the NRS, has commercialized a groundbreaking detection cancer test for dogs. Your strong eyes recently announced Antec, the largest global pet care company in the world, is now sending the test. Your distributors now with the IBEX solution. $43 million in licensing and milestone payments. Permission owns the NRS. These things about us. Yeah, that's awesome. People switch their costume and get this converse on. They don't say like this and there's no magic about it. It's simply fresh meat and vegetables with all the nutrients styles they have. Instead of
All right, we're in the 30s. 340.
it's amazing.
On the 5 minute, the 9 EMA is at 330.
Great states like being too conservative, setting retirement. Have some on your side is you on track. If there's retirement, that help you make retirement a success. The investor's guide to become retirement. 13 retirement blenders to maximize your certificate. 800-759-477. Fisher Taylor's plan is you on track. Retirement. And as a fiduciary, we do better on our clients. If your retirement portfolio is $500,000 today, you don't have to go Steve with 1-800-759-477. Your investor regime. If you're a smarter investor and a saving, a CNBC tool, and flavors investing flow, bringing investing tools, special advice, CNBC.com/access now. CNBC's trading show is trading dates, tech likes, perspective, and reviews. CNBC's yeah, it's a big thing, just that's another whole time intraday high here. But it's pretty nice about all that level, but essentially close to session months out there. So that's like a big trust then as a sort of now that's the turn to the utility sector. The second has strong first time independent grid keep out as wildfires spread across the western U.S. Power demand surges nationwide. AI with its 20th now is outlook at international president CEO Pedro Pizarro. The company oversees the biggest electric utilities in the U.S. serving 15 million residents across Southern California. Pedro, great to have you with us. Some of the wildfire situation in California, however, we could view that, and how we should view that versus, say, last year's fire exposure. But we're seeing a number of fires start to stay over issues however, this even changes doing, we're 8 years from becoming the studies, it's a great year for that. The investments are coming down for this over the last 6 years that led to an 85 to 88% reduction in the number of credit structures running down. And only the state is flat resources. So the state is much better prepared for this going else. And your company that how are you modeling that risk compared to last year? Are you modeling anything same or working out the conditions this year? It would be above average. We see much worse years. Certainly 19, 20, 21 were very much average years. You see some of the issues that we take on are making a big difference in terms of continuing our events. So, investors ask me about this. I point out that anything from the utility system is never great. The focus here is learning the provider systems, the monitoring that we're doing, the partnership with this thing to move the one virus for one this year, but then how are you gearing up for the demand that you will see in years from data centers specifically? I read in the Jeffries note
Sticking to our guns, man. No volume. Not taking a trade. Look at that decrease in. We can see this all the way to the close. No one wants to commit.
That's changed, right? It's data centers and AI, but it's also the reshoring of manufacturing successes of the chips and things that have been actually made, as well as the determination, which we're certainly seeing California. Also, let's say, put all that together, it seems that 2 years ago, the 5-year forecast for national GDP was 2.6%. Now, that 5-year forecast is 4.7%. And in some states, you're seeing as much as 8% better. What are we doing about it?
All right, we're in the 30s. Let's get down to 3.3, 3.30, 3.25, do a bounce up, and continue on for another 75 points. That's what we want.
Think about just a past year. But Anthony, now, data center That's going fast and furious. And so for somebody seeing that, see fire syndrome, seeing the warning for systems, purposes, then you know, system resources. You mentioned public reliability. I mean, that referring to maybe this is a Russian rule, but the next one might be.
Trying to do a bull flag up on the 5 minute. All right, we're retracing now.
So to me, the fact that I bring that everybody addresses resources and resources is bringing a driving transition across the planet. Now that's it. We're seeing technology bringing further improvements for 100 years. We're excited about the use of AI to bring intelligence, particularly as the bringing us to decentralized. We have distributed resources that are playing a point from. In our area, for example, it used to be that maybe dozens of central stations. Luckily, we have that. But we have thousands or tens of thousands of distributed sources of and so AI can help to bring it back. We also have other technologies coming to the fore that can help increase the utilization of the brain itself. So, for example, we enhancing technologies like advanced conductors that can carry more room, even geography. Dynamic vibrations and the help adjust how the brain's being used and it's a really power to it. So we're excited about this combination of working knowledge for us.
All right, let's get that bounce. Let's get that bounce.
Andrew, great speaking with you. Thank you.
Appreciate it too. So now we're seeing these updates. We're sort of websites again.
Israel says it the singer is born and a strike in Lebanon. Military group also confirmed the deaths and he's in terms of diplomats work going into an all-out war between the sides. Officials in India say a deadly stampede at a religious event yesterday is 21 lives. Authorities say the majority of the victims were women. Police were seen collecting evidence at the site today around.
Holy crap. 121 people in India killed in a stampede. That is crazy. Damn, that's sad and disgusting. All right, we hit 3:30. So we get that bounce and market came back down. See, we went up, retrace, up, retrace. Now let's see if we're going back up.
The future isn't scary. Steering is.
For bills that you need, DVR Pure personal space cooler that cools your place will save you money. Just add water and turn it on. Pure Chill has 3 Arctic settings and is whisper quiet for a comfortable night's sleep. Place in the living room and break a sweat. Stay cool while you cook and breathe easy as it humidifies your room. Plus, our True Shield filter removes odors. Get your Arctic Air products online or at these fine retailers.
In the U.S. alone, 127 million adults adults have at least one risk factor for heart disease, and 1 out of every 3 deaths is attributed to heart disease. The average wait time for a heart screening is 1 month. Now, Biotricity, stock symbol BTCY on the NASDAQ, has launched Heart Secure, a user-friendly direct-to-consumer cardiac screening service that is transforming an industry, unlocking new revenue streams, and driving shareholder value. Biotricity, stock symbol BTCY on the NASDAQ. Those are crazy. She's no idea she's sitting there green. She doesn't know that if she owns a life insurance policy of $100,000 or more, she can send walk up to Donchian for cash. Even a term policy. You got a term policy? Find out if you're sitting on gold mine. Call Coventry Direct today, 800-476-0100. Or visit CoventryDirect.com. I thought something different on my hand. It's blue chew. Blue chew. Blue chew. Blue chew. Blue chew. Wait. Said it again.
This Dominique home trend, it's not for me. Now, this is more like it. Same goes for my foot first. When I went hands-free, but wide fit sketcher slip-ins. Just skip in and go without bending down or touching my shoes. Wide fit hands-free sketcher slip. Just 8 minutes ago, but doesn't see good.
European markets closed at 11:30. So
Germany, France, and Spain. So Italy needs 100.
Spain and France, Germany, they had a good move up. Germany DAX is up 200.
Leading into elections, first round, first again, second round. Next weekend in France, because the UK has tomorrow for parliamentary elections. And you
This thing's petering out.
elections. So let's bring in the Atlantic Council CEO and senior contributor Fred Kemp. Fred, great to see you. Thanks so much for joining us. It's interesting to see if we do focus in on France and the UK. Well, on the surface, it could seem like similar things happening because the incumbent, I guess, is suffering or likely to suffer. The elections haven't taken place in full yet. But the beneficiary is quite different. You've got Labour centre left likely to come in the UK, and Marine Le Pen's right of centre or far right in some regards doing very well in France. Yeah, I think you have to take them quite separately. Let's start with France because I think it's a self-executive move by French President Macron. They need to call snap elections for parliament. Anybody needs to do that because 3 years from now, he responded to the European elections. The best outcome he's likely to come up with on Sunday is Parliament. And that's why government was with us in the economy. Stop the whole right national rate from being able to place a prime minister and therefore put a very awkward cohabitation for the next 3 years. What's at stake is 7 years of economic progress in France. A lot of voters don't like Macron, but when he's the economic side, he's bringing a lot of years of average growth. He's created 2 million jobs, $6 million businesses. He's made it easier for businesses to hire and his business taxes, lower wealth taxes, the the pension system, all of that really is at stake in this, and whether there's a parliament or whether right picks parliament. And
Jeez. That is kind of a lagging indicator, but
she's
it's not trending up anymore.
service choice. It's going to be tomorrow. And certainly think I think that's also in favor of the left and later. And you're in favor of change of 14 years and falling productivity, sleep productivity, low growth. And the Tories are still being punished, I think, for leaving the evening press does not pay. So two different stories for anti-income.
To what extent do you think inflation is one of the key factors that's hurt the incumbents, and will it play out similarly in the US later this year, or is it a different picture because of the otherwise broader strength of the economy in the US?
Yeah, well, the U.S. no doubt, after all the President Biden is saying questions about his age, he's testing NASDAQ, hitting records levels. And so, when I have conversations with our leaders, they start by complaining about our dysfunctional tolerance, and then they go on talking about the billions of dollars they invest in our markets. And so, I think our inflation is under control. We're in a bit of a different situation than Europe, where growth is slowing, the interest rate policies on a different level. And so I think inflation plays a role, I'm sure, in perceptions, but I think still growth plays a bigger role in the UK. And I think that's immigration.
All right, getting a big move here now. Maybe we'll get back up in there.
For instance, the French tradition, it doesn't seem to be working as well now. I think voters are punishing for that right now.
Let's talk just broadly about the implications in France for the EU as a whole. I mean, clearly we're not talking about any chance of a sort of French exit type movement, but as you said in your first answer, almost the best case scenario at the moment in terms of the second round versus weekend is Britain. The possibility could be that there is a Le Pen and far right majority. Neither of those are good for the EU as a whole. Certainly not compared to the status quo of the last 7 years, where you have a very pro-European President Macron driving not just French policy.
Yeah, you can tell it's a lagging indicator. I mean, there it moves up. So there, right there, the little bump, the bump occurred after. Oh, dip started happening over here, right there. But I don't jump it. Let it play out. We could do one of these moves. Doesn't make it all the way up, dips again, and then rips.
He's trying to appear to be Germany shows the prime minister from the Social Democrats. His party got less of a percentage than AFD, the Party. His coalition still is in about 30%, 31% position, so they're not going to beat them type soon. But Germany, election is a real problem. Energy prices high, and that growth is near zero. This gets to your EU point. If you don't have a French and German engine running Europe, then Europe doesn't get run very effectively. And right now, you have both political leaderships in some trouble, and then not coordinating policies working closely together as they've done so many years in the past.
Fred Kemp, thanks so much.
Thank you.
Share the view by Lindy is on Novo Nordisk. There was an article published in JAMA Ophthalmology, a research report, which showed that patients who prescribed semaglutide and that of their type 2 diabetes were at higher risk of developing a condition called NAION, which is non-arterial anterior ischemic optic neuropathy. which causes blindness. And the high risk associated with taking GLP-1s as opposed to non-GLP-1s. So like we've had, of course, the compound patent by Eli Lilly for peptide, also GLP-1 patent by Eli Lilly. Both stocks received falling on the publication of
Come on,
just moments ago. Meantime,
make some money.
Great Howard. My kids have been buying new. That's right after this, right?
Is your shower trying to tell you something? Is getting in and out of the bathtub becoming a safety concern? Are you worried about the cost of a bathroom remodel that could go on for weeks and weeks? Well, now you can have a gorgeous new bathroom shower that's safer at a price you can afford with a one-day jacuzzi bathroom remodel.
It's done the same day. Didn't have a baby.
Amazing. Reviewing the jacuzzi design consultants, it was a seamless process, and it really is an offshoot for everyone.
I would give this full experience. I mean, I definitely wish I would have thought so.
Jacuzzi has been making water great for more than 65 years. So you know it's a brand you can trust, and their products come with a lifetime warranty for a style you'll love for years to come. Plus, there has never been a better time to buy. We're waiving all installation costs and providing all payments for up to 1 year. There are so many designs to choose from, including my Christina Preferred collection. Plus, we offer free personalized in-home design services to build the bath you've always wanted, right in your own space. And let's talk about accessories. From soft close shower doors and adjustable shower head to features like grab bars and custom seats that combine safety and style to keep you feeling comfortable and independent for years to come. Plus, cleanups of no grimy grout and no scrubbing. It just rinses clean. It's never been easier. Get your free design consultation, schedule your one-day, and start loving your new bathroom shower right away.
Call or go online right now for a limited time offer. Only weeks left to get waived installation and no interest and no payments for up to 1 year. Go to jacuzzibathroom.com or call 800-990-6845. That's 800-990-6845. Call now. Spicy cheese blend, crispy cooked pepperoni, and always different pricing. Try the whole fiery flavors meat for a limited time.
It won't be hard to find someone to fix this. But before I started Angie's List, different story. A lot has changed for us at Angie since then, but the issues facing homeowners are the same. And the solution too. Skilled local pros. Get started at Angie.com.
Tell your investor like you. Become a smarter investor and save when you want a CNBC Pro and Jim Cramer's Investing Club. 2 premium investing tools, 1 special price. CNBC.com/access now.
You've played at the same French resort every year, where winning requires a certain you win the annual championship on Golf Channel Cup, part of the greatest summer of golf.
Back as a popularity of AI searches, so too is the carbon footprint of AI firms, with one study estimating that generating an image with AI takes as much energy as fully charging your smartphone. It's also bad news for those companies' emissions goals. Did you dig into that for us today on Tech Check, maybe?
Hey, well, so all the major players have committed to net zero targets.
Man,
Forcing on the mega caps to find new ways of securing electricity.
our indicator dipped down and didn't even take the damn trade.
Where they can, so that they may even begin to try to meet those goals. Take a look at Google's latest environmental report. Everything
I have to break out,
years ago.
but we're not doing this.
Power sets up. Here's another chart from Google report itself that shows that energy efficiency in data centers has actually been getting much better. They used about 5.8 times less overhead energy for every unit of IT equipment. But that previous chart, it shows that demand for AI applications, which are compute heavy, have skyrocketed, increasing net overall consumption. We're seeing
Man, it's just not moving.
Microsoft's 2023 mission.
This is moving back up a little bit, but we got to be above 75.
Generative AI will increase in annual average of 70% through 2027, mostly through what else the growth of those data centers for AI application. Now, the mega caps themselves, they're increasing.
Got the volume there, but
integrate energy into their supply chain. Amazon Cloud Unit outright bought a nuclear powered data center in Pennsylvania for 6
one leg, 2 leg, 3 leg. I don't want to get on the 4th leg.
Energy. Mentioned, it acknowledges that reaching its zero emissions goal by 2030 will be challenging. It admits that total emissions are going to rise before they drop, and the key solutions don't currently exist and will depend heavily on the broader clean energy transition, which brings us to a core paradox. One of the promises of generative AI is that it will revolutionize energy consumption through things like optimization and enhanced data analysis. Google DeepMind has already used AI to reduce consumption in data centers. I go back to my conversation with Google's Center for China 2 months ago, when he said that they will be able to bring AI overviews to 1 billion users by year end without increasing costs materially. Plus, guys, another side of this is that many of these mega caps, they're investing in green energy. It's not just access, but it's developing new methods so that they can take advantage of that. And in turn, that will be better for the energy levels.
Well, we'll see how long it takes for those benefits to come forward. Dean, thanks so much for that. Deirdre Bush there with Tech Check today. Well, coming out, Manhattan real estate is selling into the buyer's market as prices slide. We've got the details after this short break.
Oh.
Tech Check is sponsored by Comcast Business, powering possibilities.
Fine. Yikes. Thinking refrigerator qualified. Is that bad? Oh, death of an AC fan motor. Oh no. But your future is bright with American Home Shield warranty and to protect your covered appliances and all systems. But the fees behind me?
I mean the scheme.
But now we talked about that American Home Shield. Don't worry, be warranty. This is our future, Mom. So Daddy Arrow creates a low-blow website, even sells cell phones in minutes. Oh, AI.
130, 715.
Is your business online? Don't take care.
30.
This is your green retirement. How about this weekend? I like mission.
So,
This for your style. Retiring wealth isn't a guarantee, it's a goal. It's easy when markets are going up. But what about when they're not? That's why you need this. Call for Fisher's Retirement Survival Kit, featuring your guide to surviving market volatility. Our stock market outlook, plus the Fisher investment difference. 3 indispensable guides.
16, 14, 16, 14, 65.
Fisher Investments, the disciplined approach will help see you through the market's ups and downs and give you the confidence you need to reach a comfortable retirement. Our fees are structured so you can control our clients' income. Call now for your free retirement swap kit at 1-800-213-9336. See if your dream retirement's in trap. If your retirement portfolio is $500,000 or more, give us a call. Call 1-800-213-5317. What is the
Tick trail. Come on, let's rock and roll, babies. She broke that. Start the high. Look for a continuation. And we got nice volume. Probably the best volume since pretty close to the open. I mean, it's a little bit above that. This volume. Last hour at least. No, don't fail me now.
So, save yourself. Sunrise, save so, sure on.
Real estate's becoming a buyer's market as prices drop. Inventory's on the rise. Remember, price down retail. Hammer.
Listen, it happens. They still for 2 years. Buying incentives just remain too far apart and price down. The sellers are caving and deals. 2,600 sales that quarter than that. That's a 12% jump over last year and the first increase in 2 years. Rising inventory and payment prices there, the big drivers. The average of 100%. 3% in the second quarter. Now, cost you only $2 million to buy a Manhattan. Listings are piled up and sitting on the market longer. There are 8,000 apartments for sale. So that frame would take about 10 months to sell all of the listed. We're saying maybe for 6 months, sitting 8 buyers market. So we're buyer's market right now. We're saying that they expect the rest of the year to be stronger, especially if rates fall and mortgage rates are not as much of a factor of Manhattan. 62% of the deals Manhattan all past the quarter. That is your time record. You're going to see the rates due later next week. You're going to see what they did in June, and that's one of the reasons they're moving out of the very high expensive rental market in excess market because the average rent in Manhattan has been sitting at $5,000 a month. Will be 6 months next.
It seems like around finally they're just around the things that rates are going to remain where they are.
All right, got a new high. It's pierced a new high.
That's absolutely true. I think a lot of the buyers just said, look, we're going to get that magic, drop to 5%, so more than anytime soon. And we're seeing big, that's about the rent. We might as well like it. So there's certain on both sides, and they're going to make, this standoff between buyers and sellers for 2 years now, but again, we're going to see whether those deals continue in the second half. Well, obviously, Robert, pretty much is prime of markets as it comes. Is the prime markets around US service some of the insurance deal unique in terms of suddenly seeing Mr. Dunbar. New York is a bit unique, although when it comes to inventory, we are seeing more certain inventory in South Florida, Miami, you have a large number of new condos come on the market, so they're getting more supply. You can see prices there. And in LA, you're seeing more supply and people that actually have less demand. So what's the difference, especially in markets you are seeing?
Nvidia is making a move. Come on.
Yeah. Interesting is the market mentioned you got the S&P pretty much advanced and then you exit for 1.5 payouts, whereas the Dow's pretty much below the deck, but it's a thin margin, not the 30% S&P down 30%. Yeah.
And you need to watch regularly and notice, on the published publication of that general report, which indicates there could be higher risk for a condition that could
The Dow and the Russell aren't doing anything.
Say that study will have to be done in order to see if there's a fossil. It's just a coincidence, related, but still, still like the demand side of the equation.
Extra reason supposed to show it's coming out next. It's not just all done for it's about what's supposed to be.
Nice, let's go.
We'll take that. I'll bet you that. For trading day on South. I think we could closing bill today. We're going to take you right up as a trade. Joining me for the hour, Janice and Coach, Joe Chernobyl.
I only got an hour. The market closes.
The evidence down about 1/4 of Joe's today thus far. Services sub 50. Users will be heard. Yields have been creeping up, but they are down. And I guess no surprise in that Next, that is the thing that is the and I keep emphasizing this. This is the story. This is the story going into the second half of the year. You think about the Mag 7 coming into 2024. We have this moment where we said, no, it's either the Super 6 or it's the Fab 5. And guess what? Here we are back talking about Mag 7 once again. You've had this wonderful technical breakout in Amazon, which is carrying forward. And now, how about Tesla? Tesla since June 24th, it's up 32%. So they stay.
Yeah, Tesla's on fire today. Semiconductors are rough. Semiconductors are going. Semiconductors at a high today. S&P at a high. PayPal's coming back from being down. Nvidia's at the high of the day. Nvidia. That's kind of bullish on Nvidia. It can break 128. With another dollar, it could go back up. Highs, it might push the market up. Meta's finally catching some bids. Salesforce. It's moving. AMD's down, but the Saxo index is down. Probably being weighted by Nvidia. Amazon's down. Amazon has some good news, but such a not at the low of the day, but if it can bounce, it could help carry the market too. Top 10 stocks of the NASDAQ: Apple, Microsoft, Amazon, Nvidia, Google, Tesla, Meta, Broadcom, Costco. Costco's down, but it can move up. I don't know let this work. I gotta see who's here.
Today, we're so perceiving instruments against consumer, finding things currently and policy impacting emotions. So there's the higher rates is going to continue to occur. I see even the gentleman sitting to your left, as I see has expressed some of his concerns of late about the state of the economy. You get it backed up, it's concerns backed up by data. Services, as I said, some 50. Right, services at a certain point. Yeah, the manufacturing surely numbers we've been getting for the better part of years. New order figures, and as I said, yeah. I mean, look, I've been optimistic for quite some time. However, it is hard to maintain the optimism in light of the data that's coming in, like ISM services. I mean, weekly jobless claims, yes, they popped up. They're not at a critical level yet, but they certainly have moved higher. I want to be clear to everybody who's watching. I'm not selling stocks. I'm fully invested and I'm in position for the bill. But what I need to be clear about is that thesis relies on rate cuts starting in September at 25 basis points and alternating 25 basis points thereafter. Every other meeting thereafter. I think the danger here, and it is significant, is they think that since they've gotten away with this for so long, that the economy is growing, the labor market has maintained strength for so long, with a very restrictive, the Fed funds rate, 5.5%, ECE is 2.5%. That's 300 basis points. that's restricted, right? They're not gonna get away with it forever. And, right now, it looks like it's like September, he's gonna be the first rate. I think that hangs in there, and if they do everything from there, I think we can skate by, but it's not starting next year. Right, I think it was really bought out. All right, Shannon. So we got a holiday short day. We have these records extended on the S&P and the Nasdaq, so it's still the same kind of story that people delivering these gains at the index level. Is that just how it's been? I'll give you
Well, I think we're coming into a really important earnings season, and I know we say that all the time, Scott, but it's really going to help us put some perspective on a lot of this mixed data that we've been talking about. If you look at the last 6 months, you talk about ISM, but there's a number of data points that you can take in the economy, but you have to crack your narrative. Narrative, inflationary narrative. Really, what it's going to be about is demand over the next 6 to 12 months. And companies themselves, in terms of their outlook and what they're anticipating and expecting, that's going to be the piece that's the most important.
Almost get a little happy fourth in here.
I suspect that we're not going to see downward pressure from the netting perspective on some of the, particularly of the technology companies that are really well. I suspect that we will see some dispersion and continue dispersion in the consumer. What I anticipate that would happen is that we could get some better perspective on demand in terms of industrial and capex demand, and that there could be perhaps a nuance or a lens with this protectionist policy that's coming from both parties, frankly, coming into 2025. I do want to make a point about this concern about inflation. The challenge with the potential Trump policies is that they become inflationary, however, likely later in 25 and into 26. So your point is well taken about a potential for some growth, which would counteract, once again, fiscally, the monetary policy that Jim was talking about. But really,
Man, just hit our profit. That'd be massive.
yeah, I think that's
Totally massive.
maybe
The narrowness of the market highlighting it against Joe as we document the fact as we under are hitting these new highs is still a concern amongst some of those who watch the markets for a living, like those at Piper Sandler. We continue to see warning signals as deteriorating market growth undermines its sustainability. Leave the S&P 500.
Costco's moving up right now. Just got a bid.
So let's first
High of the day is 861 on Costco. It's 859. Had a low of 855. So if Costco can move, you can get the market. We can get this to move. It's a weighted.
that up here.
It's a top 10 weight.
That is maybe JP. He had the lowest target on the street. We wish it well. Those are not indicators. And I can't tell you the number of times during this hour, usually around 12:30, I mean, it's daily fellow. And we mention it all the time because he was a well thought of and thoughtful disseminator, if you will, of what's happening in the markets now.
Damn, Broadcom's just moving. No wonder the stocks. I don't know if it's part of the stocks or not.
I just want to put out there that it's not easy to figure, but I cited his research almost every single time he dropped a note. So his name at least was in the halftime lexicon. You know it because we mentioned it.
Here's Broadcom today.
2 words out as well.
Broadcom's moving.
6,000. So 50 to hit that. I'm saying it's all. Just think about this.
Yeah, Apple. Not doing much. Amazon's not doing much. Costco, we can make a move.
So
Salesforce. Google's at the high of the day. Microsoft's kind of flat, but Nvidia's at the high of the day. PayPal.
yes,
There's the stock semiconductor index. See, semiconductors. The high.
is it discipline in the AI?
There's Tesla. Tesla's moving. Those are the highest weighted stocks on the NASDAQ.
Yeah, it was not. You know, it's being jumped the get you 7% fraction done. Am I getting up when I get there because of something that I have to age? Consider you just look at these calls for a 10% correction. We talk about this on. We're due for correction. We're due for correction. Why are we doing for correction?
Again, we're not moving our stop until we hit like 900. We'll move to break even because we're going for 1500 on these.
Geo seeing energy. It's the thesis surrounding AI. So based on then yes, you can tell me about a 10% collection. And what's the difference? The today, let's consider correction. This correction is just taking some of the actions, taking some correction. It's showing that fundamentally driven, doesn't want to centralize, right? So we've seen over the last decade that these are V-shaped corrections. So it actually becomes an opportunity to get more invested in the market than a panic setup. You don't like if you don't think that, you know, in NVIDIA, which is up 150% over the first half of this year, you don't think by the way, it had recently of 14-15%. But you don't think that you don't think another one of even greater magnitude would be what? Pretty quickly, that's kind of quite right. In any of these sites, whether it's Apple, as I said, it's money's the new record. Amazon, 199, basically 200 trucks is the introduction from here. That's why these stocks are the ones where all the action's been right. Except I'm going to tell you a church direction is this year you're right. When you see the stock at that kind of machine, the last few years, 10-15% is meaningless. You know, it's just a dot along the entire graph. So it's being direction would be down 30%. Not by chasing nerves, but you get very chasing nerves in AI. Again, AI is the best doctrine any technology we've ever seen. The cloud meter through the internet. So that will take out some of the weekends, and then be time to buy in. I don't see it. Right. Well, actually, I do want to see it. So I'm very full investment. So he corrects on LGL, they're aggravating. That plan. To say the other, you're not shot there. I mean, you take joy. I mean, what about you guys?
Nice.
Misery is your fault.
How far back did I go?
Yeah, to be like, I want to see that. I should take joy where it is. You know, so to exactly because I'm like I agree. Cycle of little checkers thoughts like this. Along the way that I get to get into a cheaper valuation. What's cheaper? You know, let's see your stock. Yeah, right. I think corrections, state corrections, get something worse as long as estimates for next year on the S&P 500 for earnings still 15% staying back. I don't think it's that simple. You have to have downward divisions here. Really, in that number, that's okay. But you start to see meaningful downward divisions. Next year's earnings, I'm saying next year because we're halfway through this year. That's what something in a correction could get worth. Well, I mean, there's pretty good expectations. It's having concerns, it's off the charts, everything else. Not so significant. It depends where, like the banks, for example, Shannon, you have a lot of optimism going into bank earnings, where, Mike Mayo's on the note today, I think is still using. We know about his top picks, he's bullish on City, JP Morgan, by the way, all-time high back then.
Oh, man. Come on. Let's get some of that glide going. Look at that.
Take care. Significant silver sky, I can tell you, listen, it's this idea or this thesis, if you will, that we are going to continue to see an increase in activity from the capital markets perspective. And that's, that we necessarily need a bit about the market, the IPO market.
So, we've been talking about these pullbacks and just think about the lack of volatility, at least in the S&P 500 this year. We're looking into a period coming into Jacksonville, coming out of the post Labor Day scenario where I would expect volume to pick up. And so, banks have been very conservative with their loan growth. They have been admittedly challenged on the deposit side because there's so many good opportunities, whether it's a money market fund or whether it's a T-bill, to earn really attractive rates. Those yield opportunities are going to come down. And so, competition for deposits is going to eventually be a little bit easier for banks. They're going to start to feel a little bit more constructive as they get greater transparency into the economy. And more importantly, for some of these banks, this transaction volume and the opportunity on the banking side, I do think that's starting to turn and we move into what is potentially a more supportive regulatory regime.
We try to get it at the simplest looking out of the city index. Like, see, it's not every
Yeah.
God damn, why?
it's just a secret that's just still there, unlikely to be positive for the year ahead. I don't like to get into the politics, but if the
It's driving me nuts.
regime, the Democratic regime,
I'm trying to figure out this TikTok thing. I put video on TikTok. The app is so confusing. I have no idea what I'm doing. Still don't know what I'm doing with YouTube. I'm documenting my journey doing this stuff.
Maybe consider for that interest income. If I go be specific, I'll be sitting to what I have is my biggest financial, it's a very big position for me. And I think there is an idiosyncratic story of a turnaround mainly in expense control. That as long as that continues, I see a 35% gain just at the tangible book value. Which is where it should be. There's another factor in what's going to happen.
I don't know why they do TikTok.
That our bridge policy does not exist. But we should
They make it so difficult. I mean, I don't know where you freaking click to add a video. There's TikTok Studio, but then how do you add something?
So when they shut the border, when you do the deportations that the former president has suggested you would like to do.
Create a topic.
One of the principal reasons why you get suggestions that that's sort of about the place charities that sell towers. Towers should be passed through what he says.
Oh.
It's been good with towers. And starting to be.
I guess you click the plus sign.
Duh. It's a great. That's one of their main things. So you knock out the immigration comes in. Then you're going to obviously create wage inflation to a much larger degree now. So there are a lot of problems there. We'll see what he can get through. We'll see if he can get elected. But I think that's what's running on the market. JPM. I do. And I think they're missing something with the financial sector. So it's got, we know, technology, communication services, knocking it out of the park. Now I want to take the other 9 sectors. Let's say, okay, out of those sectors, which one is outperforming the S&P? None of them. Financials, however, all the best performing sector, that's communication services and technology. And I think that's lost. And I think one of the reasons why, and I probably myself have not paid enough attention to this, is the fact of what happened last year, March of 2023, in regional banks, and how much the money center banks, the large money center banks, and regional banks have benefited from that experience with seeing deposit inflows. And JP Morgan's a great example of that. JP Morgan absolutely used that environment to their advantage, not by fault, just by the nature of the strength of their balance sheet. You can make the same argument for Goldman Sachs and Citi, others in that universe, but I think it's very clear. You've got this bifurcation. I don't see it changing anytime soon. But the regional banks over here, stay with the money center banks, they are.
Play some music, some upbeat music.
Centers, which is come on strong. It has come on strong. Well, one thing what's your example? That sector. It's really
Prop trading. Prop firm trading. Come on, we gotta hit 2447 for a take profit. Been in this trade for about 14 bars, 30 minutes. Man, I could see this pushing up to, we hit 400, 20,400. It went 20,500 or 450. These are all-time highs. Hey, you gotta be a crazy person to keep looking at the same shit day in and day out. But you don't get crazy looking at it when it's green, when you see the dollar signs. But there's some red days. We started out red. We can turn red easy also. We still aren't at break even yet. I mean, this is July 3rd. Yesterday we had a big win too, July 2nd. But I had a loss early this morning at about 4:45, 5 o'clock. So this would make up for it. eBay just dinged me. What did I get on eBay? I'm selling some comic books on eBay. Oh, they just advertisement. No one made me an offer. That blows. Boom, boom. Bow, bow, bow. Again, I'm a trend trader. Trading the trend with Trader Tate. Take the break of the high, or break of the low of the day. That's where we take our trades. Come on, get a little push. We'll move to break even. Come on. Can't seem to keep the damn camera straight. Nope.
We can get this around Jim as you like. Stops. Exhibit meaning.
There we go. Come on. Get to that 900 mark. Dive through that sucker. Like some pound cake.
So we see who's going to come to first or best. Shandy out of here. Yeah, we're going to buy
There we go. Come on. There we go. 900. A little bit more, baby. Come on. Oh yeah, baby's looking good. Boom, $1,000. Moving to break even. All or nothing. Got a high win rate once it gets past this mark to succeed.
Street, a street to the comments. So between so you know you can say insurance.
Don't come down on us. All right, on the 5 minute, we're at 9 EMAs, so I can see a little regression here before we try and head back up. Hoping that's what the case is. And hope that 20,400 wasn't resistance there for a bit. Hope we can just power back up. But I got $20. $20 locked in on my stop, so I don't know. All or nothing. I'll be right back. Give me something to snack on. Apple or peanut butter? Yeah, bounce right off the 5 minute 90 minute.
So, Coach, you mentioned me. I used asking to be able to recover my diet today. There is okay, I'm super nervous, but I'm so lazy.
He has something on my playlist.
As we approach the close again, record highs for the S&P, NASDAQ, extending
Record highs, man.
specific things that are in the move. Paramount studies near a merger. Our indicator says yesterday that shopping. Steve, I can't believe that.
And we're up $1,000 at one point. Come on. I only got like 18 minutes left anyway, so it's not like a full day of trading. I just saw the time, I forgot. So I need to start thinking about actually, if I'm going to close this out or let it go to the, I can't let it go to the end. They'll penalize me for doing that. So actually, maybe I will move my stop or something. Usually, I close my trades about 10 minutes to the close of the day at the futures market. So, I wonder if I should just close it at 12:50, no matter where we are. Forgot it was an early day on the futures market. That candle don't look good. Gonna stop this out. There, I moved my stop up a little bit. That's 4.5. Four and a half points. Yeah, $100. That's where I took it at because I got to close that at 15 minutes anyway. I forgot the market closes at 1 o'clock today. So probably should have took 1,000, but I'm always going for the big one there. That would have. Yeah, we would have been. My entry was. Yeah, I would have been stopped anyway. So, yeah. Break even trade. I'll take it. Alright, I'm calling it a day. I need to run some back tests and stuff, so I'll see you.
Future is now open for investments.